Coming up on today's episode.
Probably for Compound, the biggest difference that we see is like we're not like fixated on this is how you do it and that's it. We really give people the options around like what their options are and what will suit them the best. So we like to be able to take people from a first time investor and typically through residential property, affordable price point and building it up, right up into commercial property, which is where we see a lot of people's journey end.
Dodgy advice and bad decisions can cost you big in real estate. We're here to make sure that doesn't happen. Welcome to the No BS Real Estate Podcast. I'm your host, Jo Agresta, and it's time to take control of your property journey together. Welcome back, everyone, to the No BS Real Estate Podcast, your listening how-to guide to the Australian finance and property market. I'm your host, Jo Agresta, and today, if you're a home buyer, a property investor, or you're just looking for smarter ways to grow your wealth, this episode's for you. Today, I'm joined by Ben and Kyle, the powerhouse duo behind Compound Property, a buyer's agency that's all about helping everyday Aussies build wealth through smart property investing. Their approach is data-driven, meaning they don't just guess where to buy. They use hard numbers, research, and they pinpoint the best suburbs and properties with strong capital growth and high rental returns. And you might ask what makes them stand out. They focus on freestanding houses on large blocks, picking only the top 1% of suburbs across Australia to give their clients a real advantage in the market. Plus, they're expert negotiators, meaning they don't just find great properties, they help secure them at the best possible price. So in this episode, we're going to cover how does Compound Property, how did they start, what inspired their approach, what makes their investment strategies different from the rest, where the property market is heading and what home buyers or new investors need to know right now, and some amazing client success stories and lessons from the toughest deals that they've had to close. So if you've ever wondered how data, strategy, expert negotiation can help you buy smarter and grow your wealth faster, stick around. So guys, thank you so much for being on the show.
Thanks for having us, Jo.
Thanks, Joe. I appreciate the introduction.
Yeah, I'll sit there.
No, you're right. I have to give you guys credit because like I said to you right before this call started, I'm so passionate about data myself. I think data-driven insights is super important when you're buying property. And I love the mission that you guys are on, that it's very prominent on your website as a strategy that you do. So I think our listeners are going to get a lot out of today's interview with you guys. So I'm keen to get into it.
Yeah, let's go. Keen as.
Let's get it. So Ben and Kyle, let's start with your journey. What led you both to create Compound Property? Where did it all start?
I'll let Ben take this because Ben is the founder. So I'll let him start and then I'll kind of just share how we started working together.
Thanks,
For sure.
Joe. Yeah, so I guess I have not the typical property experience. Actually, I've had previous other businesses. So I've always kind of, been quite entrepreneurial and had businesses in education and also hospitality. But when I sold out of those, throughout that whole period, my true passion, was what I was doing on the side, which was property investing and building up my own personal portfolio. So when I exited out of those businesses, I took a bit of time to reflect and understand what I really wanted to do from a passion perspective. And it was quite clear to me that it was property investing, and that basically formulated Compound and helping people take the same journey that I'm currently on as well.
That's awesome. I mean, good on you for taking the leap of passion, right? It's always hard to take a risk because it is a risk. It's like, I know I really want to do this. So no, that's great. And Kyle, what can you add to that? When did you come into the picture? How did your journey begin?
Yeah, I think my journey began outside of Compound. Actually, it was working with another buyer's agent space. I think during that time, it was more of an understanding of strategy and what actually worked in the Australian property market. And, it was kind of like one of them things when I fell into it, so to speak. I got a real passion for it. I realized that a lot of people I was speaking to were doing it wrong. And just started seeing that, I realized that there was just such a need there to help people understand some of the right ways to invest in property and some strategies that maybe hadn't been considered before and should be considered if you want to be successful in it. And so that kind of just took me on this kind of learning kind of journey and a bit of a passion journey as well now of helping people understand what are your options when you're getting into property and what does each option lead to and what's the outcome you're trying to achieve. So I'm very much in the sales, onboarding kind of advisor part of Compound. So essentially helping first-time buyers, people who have maybe a principal place and want to invest, make sense of what that looks like for them and understand what they want to achieve, and then what kind of property is best suited for them now to help them get there eventually. And we'll talk about it more in terms of what we buy and why we buy it. But yeah, it was more of I got into it about 2 years ago into property, and then very happy I found Ben and in terms of his strategy and just who he is, very much aligned with myself and what I was wanting to do as well in the space. So yeah, very happy to be here and be working with someone like Ben.
No, that's awesome. Good on you guys. I think, working in property is always because you're dealing with people's, biggest assets, right? And you want to make sure that you're doing the right thing by them with their money, their finance, and what they're investing in. So I think anyone in this profession is always super diligent with everything they're doing. What was the aha moment, if you will, that made you realize that there was a better way to help investors buy property? And where did this kind of begin?
Yeah, probably for myself, it was the aha moment was definitely being open to buying not just in your backyard. So yeah, I've been investing for 8 years, and the first 4 years of that were very much focused on where I knew, which was Sydney. And as you're probably aware, Sydney prices are pretty hard for any investor, to be honest. And they don't really make sense. So when I really dug into it and understood that I could invest in other places, firstly starting in WA, it was just like a complete eye-opener. And that if you pick the right market, first of all, it's much more affordable. But from a growth perspective, if you're timing it correctly, I guess the results that you can have are quite incredible.
Yeah, that's really interesting that you say that, because I think one of the biggest risks of not risks, but mentally, it's a hurdle to overcome, is you don't know where you don't know anything outside your own backyard, right? So how did, when you first began and you thought, okay, I'm going to look at other markets, was there anyone that you had to engage, or did you kind of just, do this yourself and take those stepping stones yourself?
I went on a big, just a big learning journey, did every single course out there. Yeah, met with a few buyers agents at the time, and also followed someone named Terry Ryder, who owns
I know Terry Ryder.
Spotty, and we now work really closely with him actually in their team. Always read and what he was interested in, what he was targeting, and then so I guess I was DIY, but with the accessing as much information as I could. And then it was only when I actually did it that I naturally then started to learn even further about how it worked, and then obviously got to the point where we could help others as well.
That's amazing.
I think it's understanding as well, these markets, how much growth you can get as well, as opposed to maybe buying in your backyard. We're both in Sydney, and obviously property here is quite unaffordable for most people. And so when you do buy interstate, yes, you can get properties more affordable, but also in terms of the growth that you're able to see on them, it is above average. And so whenever you understand and this is for me my aha moment of understanding, how do you grow a portfolio instead of buying something super expensive and then just kind of holding that for a long term and not really having an opportunity to grow beyond that. It's focusing on affordable properties that are going to grow and give you that equity, which is essentially what I realized to be the greatest thing about property investing, which was, that you can use that to help you buy another one. So, obviously your income is taxed and you can save that up, for the first one, and it might take longer to do than you expect. But once you do that, you can really see how quickly you can move on to your second and third if you buy in the right market and you focus on affordable properties. And that's just something for me that I realized when I started getting into property was just something a lot of people didn't understand, and helping them understand that unlocked this idea of I can actually grow a portfolio as opposed to buy one property.
Was there a particular gap in the market that you saw that you wanted to solve? And I'm more leaning towards, because you've got the difference I see, when I researched you guys in comparison to other advocates, was this data-driven component. So every agent talks about it, but you guys seem to have a particular passion for it.
Yeah, I think we've kind of got two gaps that we saw in the market that we're really working on. One is data, but look, in fairness, there are other people out there that are getting access to the same data now. It's probably not as common as when we started. Now people are starting to understand it, but it always comes down to interpretation of data as well, because it's not just as clear as this is where to buy. It's really how we internally look at data, look at the different metrics and make our decision. But probably for Compound, the biggest difference that we see is we're not fixated on this is how you do it and that's it. We really give people the options around what their options are and what will suit them the best. So we like to be able to take people from a first-time investor, and typically through residential property, affordable price point, and building it up, right up into commercial property, which is where we see a lot of people's journey end once they really want to hit that income target. So we give them a full picture so that we can align with them from their start of their portfolio right to the end.
That's amazing. I think the full picture is really important. And I think a lot of the time, for those tuning in right now who are listening, who have been thinking about getting into property investment, the overall goal is very important. And I think that's it makes a big part of the conversations you need to have and how close you need to be with your clients. Especially as an advocate, you need to have that understanding you are the buyer, essentially, as well. by proxy.
100%. And also, Kyle obviously does a lot of work with people about their goals and how to achieve them. But if we can't offer everything, then effectively, we can't really give a full picture to how to get there. So we're really trying to offer everything that we can that's going to allow our clients to reach their goal, depending on what that might be.
And the clients that come to us, they do come in all different stages of their journey as well. And that's something that we have to consider and cater for as well. We don't want to turn someone away because we can't help them. We want to help them understand the best move for them. It might be someone getting into the market with very limited borrowing capacity, right? Their income is on the lower end, they're just getting started, they have X amount of savings. So they're really looking at like a really kind of foundational property, something that's not too expensive, is cash flow strong enough to support it. And they also get that exposure to the market, which is going to allow them to build equity, right? But then we also get people coming to us who are seasoned investors. They've made a couple of purchases, they've built wealth, and they're trying to make that transition into more cash flow. And that's where I guess the commercial side comes in and helping people understand what that looks like, because it's still, for a lot of people, they haven't done a lot of research on that themselves or understanding it. So it's helping them realize what every option brings for them at every stage that they're at, and then being able to help them, I guess, make that purchase or transact in that market.
For sure. And it's very well said. And this kind of leads into my next part, talking about your services and, your actual approach to this, right? So as we've touched on, data-driven approach to find property, investment properties, can you break that down for us? Like, how does that work, or what does that look like when you get into your customer meetings?
Yeah, definitely. So I guess we've got like 4 key stages about how we like to think about property investing. The first one, through using data, is identifying growth markets. So over the long term, if you look at it statistically, most suburbs in Australia perform very similar, kind of between that like 6 and 8% annual compounding growth. But what's very different is the timing of that growth. Right. So it's really important as a property investor. Long-term growth is almost guaranteed. Right now, nothing's completely guaranteed, but statistically it is. But what you really want to capture is that short-term kind of 1 to 5 year growth. So that's the first step, is identifying that market and making sure that our clients are buying there. The second thing that we do is we focus on affordable properties with a strong cash flow. So you might have heard like there's a blue chip strategy. We call ours the blue collar, right? So we're focusing on affordable properties now. Typically between kind of 400,000 to 600,000. We can go kind of lower, we can go a little bit higher as well. That's kind of probably the sweet spot. And we are targeting properties with a rental yield between kind of 5 or 6% as well.
Right. Yeah. That's actually higher than the average.
Yeah, that's correct. So the average yield in Australia is actually 3.7%. So we consider anything above 5 or 6 as a good target. Now, that's not to create a passive income straight away, because yield is more there to hold the property, right? So it's always the capital growth that we're aiming for, but we want the yield to be able to hold the property as you do start to build out a portfolio.
That's right.
The third thing that we do is we focus on established properties with a strong land content. Now, not to ever say that other strategies don't work, but just to hear it compound, we don't target off the plan or any kind of house and land properties. So we are looking for established properties. Now, you would have heard the saying that land appreciates over time and buildings depreciate. So we're quite in favor of that. Statistically, there is kind of strong data to back that up as well. So we're focusing on properties. We're not so much focused on the land size, just having a strong land component and making sure that forms part of the purchase price. So we're paying a good amount for the land.
Yeah, of course. And I guess in terms of that process, because you hear so many strategies, right? Like people buy for different motivations. Is this a strategy that someone has to have a particular goal to get a return on? So for example, is it just if they're chasing cash flow, or can they be chasing capital gains, or tax, offsets, things like that? What is the most common motivation you see with this strategy that works?
So there's 2 key kind of goals that we help people achieve. One, for our kind of Melbourne and Sydney clients, it's typically they want to build up enough equity to be able to buy the dream home.
Right.
So that would be a very common goal that we help people work towards. And then the second one is the ability to create a passive income. So the strategy works in both ways. There are different stages throughout to get to those goals, depending on which way you're going to go. But effectively, both goals boil down to the same thing. They both need strong equity growth, and that's what we're always trying to target. And then effective and long-term good cash flow as well.
We always like to say to people, if you obviously property is not get rich quick scheme, and when people get into it, they've obviously heard people be very successful with property, but they don't understand, I guess, the time frame attached to see that success. And obviously every kind of strategy can get you there faster or might take more time. And so we like to actually bring some reality to clients as well around how long they should consider it may take to get to their goal. So, let's say being able to retire on 100,000 passive income, that doesn't come right away from cash flow, right? On the property, your cash flow on your property needs to be good enough that, as Ben said, to support the portfolio and allow you to grow it. And so the 3 stages that most people would go through and we bring reality to is, in the beginning, you want to build an asset base. So you want to be quite aggressive as you can be in the early stages to buy as much assets as you can, structure them correctly, and make sure as you target these high growth areas and you get that equity growth to leverage it to buy more assets. And then as you accumulate a few, you then go through a passive holding period, and that can be obviously the longer time in the market, the more growth on your property. And during that time, it's where we just advise people to go about their life, like go for the family, go for the upgrade in the job. Like, you have the ability to kind of live your life more on progressing it. And then eventually, when you want to retire, when you want to actually have your portfolio change your life in a way, then you would look to consolidate some of the debt, maybe transition into a commercial asset for higher cash flow purposes and live off of that. And so it's definitely more of a long-term game. And people get confused when I have an initial call sometimes with, I want a cash flow positive right away, I want to see the passive income, and it's just very hard. And we always say, like, when you really go for a high cash flow on a house, it's often you compromise a bit of growth because you could be buying in quite a cyclical area where the property's growth is predicated on an industry, or maybe it's a mining town. And so we want to avoid that and kind of strike that balance between growth and cash flow, especially when we're building that asset base. So that's kind of like some of the reality that we like to bring to clients whenever they are getting started, and to consider that long-term perspective or long-term horizon.
So now that's really solid. And I think that long-term aspect is so important. And I think where maybe some of the things that, I see in market or different conversations, because, talking to clients, you hear all their past horror stories when they've tried this the first time or the second time. They're like, oh my God, this is terrible. What are some of the biggest mistakes that you see investors or maybe even home buyers, like, who are just entering the market, make when they're choosing a property and that location, or, even just price? And I think let's focus more on that first-time investor persona.
Probably a really common one that I've seen people do is they buy a property without understanding the cash flow of the property. So they might invest in an area because they know it. So that's probably the first one. A bit too much emotion. And as a result, they bought something that's probably too high a price that they should have done. And as a result, the cash flow is too low. So they're kind of holding an asset that is very cash flow negative, and probably wasn't the right choice for them to compromise.
Yeah, I'd say the same. I think people just buy very emotionally, like without really consulting people and getting a broad perspective of their options. Family, and especially in Sydney, people grew up in Sydney around family, and another generation of family as well. They have been successful in doing things that we can't be successful by doing in terms of like property moves. And so, a lot of people will take inspiration or advice from someone who, built a property portfolio or was successful with property at a time that doesn't work now. And so it's just like helping people understand, like, in this day and age right now in 2025, if you want to be successful in property, like, what do you need to do that? And oftentimes it's not buying where you live or where you grew up or next door to your mom and dad. And oftentimes, like Ben said, it's perfectly correct. Like, there's a couple of constraints that a lot of people don't consider, and we always talk about them when we bring on a client, because people have the capacity sometimes to buy, let's say, up to $1 million. And in Sydney, you can still buy something under $1 million. But the problem is, in terms of a cash flow perspective, you can't support that asset. So you can buy it, but you can't support it. And that's something that you got to be really mindful of when you're, especially in the early stages of building a portfolio. You want something that is going to be as close to taking care of itself as possible to allow you to not have your lifestyle be affected. And whenever you say these things to people, they're like, yeah, true. I don't want to have my lifestyle be affected. I don't want my extra income to always go to this asset. And I want to be able to keep buying assets and also have a life outside of having a portfolio.
Yeah, lifestyle's key, right? So it's like, ultimately a lot of investors are getting into this to try and have a better lifestyle, not so much go into full-time property investment and flipping properties.
It's the whole thing of rent vesting, Joe, as well, right? Like, people choose that kind of rent vesting strategy, but then they buy the wrong investments and then their lifestyle is affected. And so it's like, whatever you're choosing to do, let's say it is rent vesting, you want to make sure that the properties that you do invest in are not hindering your ability to live where you want to live and be able to do the things that you want to do, which is why you're choosing that strategy.
Well, exactly. And this touches again, I want to give this enough airtime, right? Because I think it's so interesting the way, you both work towards this freestanding houses on large blocks. Why do you guys think that's the best strategy for, any investor?
You can speak to that, but I think we're in conversation about how that looks now as well, given that 3 years ago the price of a 3 to 4 bedroom on a large block with a good age was doable for the 400 to 600k price point that we would target. Yeah, just given the demand for property and limited supply in Australia, investors, owner occupiers now coming into the market with interest rates coming down, all of that stuff, we are open to, I guess, as Ben said, properties with a land component. It's just all about understanding what stage the investor is at and what is going to be the most suitable for them. But you can touch on that, I guess, what that looks like specifically.
Yeah, I guess, Joe, with property, like I said, having a strong land component is important because it is the buildings effectively do depreciate over time, and it is the land value that goes up. Now, it's not to say, because apartments can have a land content too, and particularly smaller blocks as well, but from just risk mitigation, we like to focus on properties that, typically freestanding, that way no strata, so things that we can't control. Typically families, they rent really well because it's always in demand, and they're not as easy just to replace and build and add more too. So it's just a risk mitigation. Statistically, houses have outperformed all other asset types as well over the long term from a capital growth perspective. So providing that you can buy them with a solid yield, because they can be lower yielding than other assets, but if you can buy them with a strong yield, for us it just seems to be the safest and best way to guarantee that growth.
No, I really like that answer. I think that's solid, because I've always personally preferred houses with land, because land has value. Yep. So it's whenever I see someone looking at apartments, I'm like, I will never recommend an apartment because there's no value, right? It's you're buying the bricks and mortar, and in a lot of the time, whatever crappy material.
Also gives you more control over your asset as well, right? Let's say you're in that holding period where you're holding assets and you want to add more value to the property to get more equity to use. You have the ability to do that. You own the land, you own the property. Also, just from if you want to build a granny flat or anything to do with on that parcel of land, you have the ability to do that. Not something we'd probably advise in the short term when you're building your portfolio, but you have the ability to, and that's the most important thing. And also down the line, when you're considering selling and considering that kind of stage of your portfolio journey, oftentimes a larger land size in a good location, a developer sees that as a very attractive buy as well, because they could then develop multiple properties on that parcel of land. And so it's just in the medium term, you have the ability to develop the land, but also down the line, you have the ability to sell it for the most profit, right? Because it's attractive.
Yeah, absolutely. A lot of the investors that come in and start the journey with you, when they perform over, a few, years, months, where is the, you said they end up in commercial space oftentimes, towards the end, it ends up in commercial. What does that journey look like, and how does one get into that, part where they want to just go into commercial as an end goal?
Yeah, definitely. So the commercial has some key benefits over residential, but also some downsides as well. So the biggest benefit for commercial is that the leases are all net yield. So effectively the tenants cover all the outgoing. So you can get a 6% net yield on a commercial property as opposed to a 5 or 6% gross yield in residential, which basically means it's about 3 times more cash flow, right? So if your goal is passive income, then obviously a higher income is better to get there. So that's why we do allow clients to look at the option for commercial, but it's not for everyone, right? So there are some downsides. One of the downsides is the price, right? It's very hard to get into a commercial property under $1 million. And to be honest, the higher that you go, the better the properties get. Banks won't lend the same as they will residential. You need typically a 30 or 35% deposit. Yeah, so it's a bit high. It is a bit of a higher entry for clients, but that's why at some point in your portfolio, it does make sense to have a look at, because a lot of our clients have built a lot of equity through their portfolio. They might have consolidated and sold down, had a lot of cash, and then it's always worth having a look if the goal is cash flow into commercial.
Yeah, that's super interesting. I didn't realize the deposit was so high. And what I like though about how this is obtained, like with your strategy, is they're starting off in residential space, right? They're building their portfolio, they're building growth, and it now makes the goal of going into commercial. If maybe that was their initial goal from day one and they couldn't do it, they've now got a clear pathway that you guys have set the stepping stones for to get into that market. So I think that's excellent. Like, well done and kudos to you guys for working out a strategy that actually can accomplish the long-term goal, because I think that's really hard.
Appreciate it, Joe. Thank you.
Of course. And look, I want to flip over to the current market, because every guest I've had on the show, especially in this last month with the RBA making their announcements of rate cuts, I want to talk about the current market because you guys are in it and I would love your opinion. So everyone's talking about interest rates, supply shortages, affordability issues. What's your take on the current market and at the moment?
Yeah, it's probably two things, Joe. One is demand. So yeah, we are seeing increased demand, particularly with interest rates dropping. So from an investor perspective, it's very strong. The second is supply, which you've just kind of just spoken about too. So there is definitely a shortage of properties. There's no doubt. We've probably been battling against that since maybe end of 2023, it's felt like.
That's true.
Just to give the listeners a bit of context, some markets that we buy in, you might have between 10 up to kind of 50 offers within the first 24 hours. So, that's kind of the market pressure we're feeling. As a result of that, what I see happening now is some markets are getting towards the top of their cycle because there has been a tremendous amount of growth over the last few years. And as a result, we are entering new markets this year, which is quite exciting because there are some other markets that are early in their growth cycle.
Right. So what would you, I guess, say, like in terms of looking at the market, and it's an interesting insight, where are the hotspots at the moment in your opinion? And obviously, everyone listening, take this, in your own way. You have to do the research, do the data and reach out to Ben and Kyle to form a strategy. But what's booming right now? What markets are you seeing that are better than others?
So the hotspots now would be considered more your kind of regional Queensland or WA markets, but they have been hotspots for some time. So without giving away too much, Joe, we have been buying there for a long time, but where is next is we don't believe it's there, and it's actually, investors, it's a good opportunity to look elsewhere. And obviously we could help them with that if needed.
Absolutely, guys. That's your cue call to book in with Kyle and Ben to find the real answer.
Right. So
of course.
Australia and Queensland, yes, there has been markets that have seen pretty substantial growth over the last 2 to 3 years. But even within the markets, there's still suburbs that have yet to experience growth that those around have, but have all kind of similar metrics and infrastructure plays and growth metrics that would see that grow in value over the coming years. So it's not like they're bottomed, like kind of topped out and there's nothing left there. There's also still room to go. And you look at places like Perth, it's still so far behind the median purchase price of Brisbane, for example, that's over $1 million now. And so there's still opportunity there for those who maybe do have the preference or want to diversify what they have. But in terms of timing the market, which is what Ben spoke about, that's also important. And we've identified a few suburbs and regions specifically that if you were to buy over the next 3, 6, 12 months, you can expect above average growth in their markets.
No, that's amazing. And I'm always tongue in cheek. I'm going to ask the question, you don't have to answer it. But one of the things that I want listeners to know is, what's one big trend investors should be paying attention to right now, do you think?
Question, Joe.
Loaded question.
Look, there's no denying that the proliferation of buyer's agents and clients using buyer's agents is becoming it's a huge trend, and there is definitely a sense of it's kind of moving some markets. So probably the trend to be careful of is just not following the herd too much, because you don't want to be kind of last into some of those markets, because some of the heat coming from the number of buyers agents and investors is extremely strong. But we have seen areas where once that stops, it can really cool down quite quickly. So really important to just time where you're buying, and not just read something or listen to someone and follow the herd.
True.
No, that's solid.
And I think also buyers agents, they offer property and present property based on where they've built relationships with agents, right? Because that's an access point for them, or a difference point as to why someone would want to engage with them. And oftentimes where people see success, they kind of just double down there and don't really have a research team or understanding of markets outside of that maybe you're more optimal to enter right now. They just go based on what they have been buying and what's been working for them. And I think at Compound, we're area agnostic, as Ben likes to say. So we kind of we're not going with the herd and where everyone emotionally is talking about and has seen growth. We're looking at the data purely and identifying, at any given time that we work with a client, depending on where they're at, where is the best entry point for them to get in before everybody else, right? That's where you're going to see the most growth and uplift. Instead of buying into growth and kind of getting something more conservative, we want to give them that kind of burst of short-term capital growth to give them that, deposit for property number 2 or 3. But you just got to be careful of what you hear on, I guess, podcasts and what we sell all the time is these are the hotspots. Often if people are talking about them, it's already too late.
Yeah, I really like that. I think that's a massive point of difference with you guys. And, the way you've answered and navigated this section, I think is really insightful, especially for any of our listeners, because you're right. It's about being ahead of the trend, not already talking about, someone always says, the Queensland market's really hot. If it's hot and everyone knows and you know about it and you're telling me as not someone in property that much, it's too late, right? So I think that's really awesome that you guys actually refer to the data to try and pick those trends and get on top. So, that's solid. I really like that. And, for this, to cap off this section, but if someone is looking to buy their first investment property this year, what should they prioritise outside of obviously having a chat to you guys and having a really insightful, structured and goals orientated things? But what's a step they usually can take before that?
I think just understanding why they're investing is important. So always just start with the why and making sure that they do have an outcome they want to achieve and that property investing is going to be the right kind of means to get there. And then the second one is taking action. Right, that's the hardest thing, we completely understand, and a lot of Kyle and myself, we're helping people take that first step. Very rarely would someone regret taking action. If you look back 10 years, 20 years, you could have bought any property, and I'm sure you'd be happy right now. So you're making sure that 2025, there's a bit of uncertainty, a lot happening, but try and block it out and take action if you can.
Yeah, take action and just know that there's always a good time to buy property. It's like a lot of people I speak to have waited for a number of reasons, but these reasons are still ongoing, or there's new reasons now why they won't buy. And so there's always a good time to buy property. And I would say to people, time in the market is so important. And given that there's always a good time to buy in the market to buy in, take action. Start speaking to a mortgage broker, number one, understanding your position, understanding your finances, understanding what you're capable of buying. Maybe you don't want to max out your borrowing capacity or use all your savings, but know what your range is, know what you can purchase, because that's going to help us form a strategy for you, so that we can help you buy over the next 12 months, 1 to 2 properties. So having all them conversations and being proactive in doing that. And I guess, outside of a buyer's agent, having a good mortgage broker, a good accountant, they're like part of the strategy and part of the network that you need to have on your side to be successful with property investing. So definitely start having the conversations with those parties that I just mentioned, so that you're ready to go whenever, you get the all clear.
That's awesome. No, I really like that. And I think the buying team is so strong, right? So it's like when you have all the right professionals in your corner, everything just works so much better.
Totally.
You get to your outcome and your goals much quicker.
They help you understand things that you don't understand by yourself, right?
Yeah.
Because this is what I speak to people all the time, and sometimes you assume people understand something until you say it and you realize they never did. And so it's like having these conversations are going to bring up for you, strategies, ideas, concerns that you didn't think about. So the quicker you engage with a professional in that area that you need to deal with, the quicker you're going to better understand the things that you need to do to be successful with this whole thing. So don't hold back from having the conversations. I mean, we have a team of accountants, mortgage brokers, agents, and obviously within Compound that we want to introduce you to get the right kind of information and understanding. So if anyone needs that, by all means, reach out, no obligation.
Nice. No, that's awesome. Thank you so much for sharing that, you guys. And, one of the things that I wanted for our listeners to understand is obviously you've helped a lot of investors secure great deals. Can you share one standout success story for you guys? Is there one that's sitting at the top of mind?
There's been many, to be honest. And look,
Nice.
It has been a good few years market-wise, and we've been quite fortunate for that. But there's probably for me, I always like helping young people, right? So there's probably one that stands out just recently. We just got the reval done. So that was a young guy, because I remember when he came to us, it was like really scraping the barrel to get everything together. Right. All his savings, and he was going all in. So naturally, we wanted to get a good result for him. He came to us, this was only last year, and he had a max budget of around a $350,000 purchase price.
Right.
We wanted a freestanding house. In Australia, that seems pretty unachievable, but we were able to target, we got something for him, a really good property, 300,000 actually. So it was below what his kind of target was. He did a 10% deposit. So really kind of, which was good, allowed him to get into that property. And we just had his 6 monthly catch up, because we catch up every 6 months with our clients just to see how things are going. And we've done a bank valuation on that property and it's come in at 400,000. Right, so he's effectively gone all in around 50 to 60,000 total, and then 6 months later he's had $60,000 of growth. Yeah, so that's always a rewarding thing. A young guy like that, now he can kind of access that and keep going.
That's a great one. Thank you for sharing that. Like, that's the perfect scenario of our listeners. I think that if you had to paint a picture of someone who's like, I want to be that guy.
What you say to people when they get into this, maybe they've had exposure to other investments in their past, because they thought property is unattainable in terms of the purchase price. Be quick, whenever like this client that we're referring to was able to achieve this, it was like they put in 50, 60 grand of their own money, and because they attached it to an asset, much larger in value, obviously that grew at 10, 12%, they're able to get back what they put in within 12 months, as opposed to, let's say they'd done that in stocks, they would have got a 10% return, six grand back, and slowly they would have got to where they needed to go. But property just gives you that, ability to scale quite quickly and build wealth. And for this client, now having the conversation on how do you go again, when the conversation 12 months ago was how did I start?
It's so true, and it leads perfectly into my next question, because a lot of people do hold off investing because they're scared of making the wrong decisions, right?
Yep.
Especially when they're like a bit of a novice in the space. So how do you guide clients through that?
Yeah, well, I guess they lean on our experience, right? So a big part of our role is how do we kind of mitigate risk as much as possible. So we follow a very stringent kind of due diligence process. So we've got a number of factors as far as what we won't buy, and some are as simple as not buying on a main road near a cemetery. Some are a little bit more specific around council zoning and easements and things like that. So I guess if you are a first timer engaging a professional, you should be able to mitigate risk as much as possible. Once again, it comes back to the fundamentals too. So don't, like Kyle mentioned before, don't max out your budget on the first purchase. Try and buy a property that's got a strong land component. Try and make sure it's structurally sound and it's got, so there's a few just like kind of simple things that you can do. But once again, taking action is always important. And the good thing about property is it is somewhat forgiving over the long term, but obviously do as much research as you can to try and make sure that you're doing a good purchase the first time.
And I'd say use a buyer's agent, especially for your first one. Obviously, we are a buyer's agency. Naturally, I would say that. But at the same time, like those who don't use a buyer's agent for the first one, there is such a strict due diligence checklist that we do put up against every property. And oftentimes, we get access to properties every day, but we will sift through often 30, 40 properties per client before we present one to them, given the level of due diligence that we do in a property. Clients that come on board with no experience, they don't know this. They don't know of the things they need to look for that they should be aware of when they're making that deal. And so I always say to people, and a lot of people come to me and on the initial call, why should I use a buyer's agent? Like, why can't I do it myself? And I'm like, you can do it yourself, but have you done it before? And they say no. And I was like, well, look, my recommendation for you is use a buyer's agent for the first time, see it as an investment to not get it wrong. And then if you enjoy the process and you see the way we do things and you understand it and you have the confidence, go and do it yourself for property number 2 or 3, 4. But at least you've done the first one right. And the first one's always the most important one, because if you get the first one wrong, it's that opportunity cost of being out of the market or not being able to go again as fast as you want to. So at least for the first one, always use a buyer's agent. Go with someone you trust or that you've been able to build that kind of early relationship with. And then after that, once you understand it more, go out and do it yourself if you want to do that. But oftentimes you want to move at speed and you trust your buyer's agent to help you just repeat the process. And that's the part we enjoy, is helping you scale your portfolio. So yeah, I'd say use a buyer's agent.
I totally agree. Like, I think before all of this, when you talk, and you guys would know this experience, right? Because I'm an advocate as well. As soon as you have a customer who comes to you, or a client that first engages you who's made mistakes in the past, they go, I'm not doing that again. I'm here with a reason. And I now understand the pain point because they've experienced a very big problem. And then the first time buyers or first time investors often have that hesitation, right? Because it's the unknown. But the way I kind of think of it is, when you're thinking about selling your home, your immediate thought is, I need a real estate agent. When you're buying a home, you're dealing with the same amount of money, the assets just as big, the deposits just as big. Why don't we think the same and go, I need a buyer's agent? So, but I'm really glad to see that the market's shifting to adopting more buyers advocates in this space. I think people are definitely cluing in to the benefits and, making sure that they don't make big mistakes in property. Well, I wanted to ask, before we wrap up, what is next for you guys? Do you have any big goals for 2025 and beyond, or anything that you kind of want to share with the broader audience?
Yeah, I guess we have a bit of a unique goal in that we don't want to become too big, which is a little bit strange.
Oh, I love it.
Yeah, a lot of people have a kind of a goal of just like continuous growth, but for us, we actually have a goal to set a limit on new and make sure that we're servicing them from a long-term relationship perspective.
Right.
So, like I mentioned, really be able to start from the very start of their portfolio to taking them right through to the end. So I guess our goal this year is really be able to cement that as far as our service offering, our team, and then just kind of doing that long term.
Yeah,
I love it.
And I couldn't agree more. I think Ben and I have had this conversation multiple times, because I guess we like to stay in our own lane. Like, we don't want to look at the competitors that speak out there and kind of how do we get to 80 clients a month and kind of scale the business to be at that point. That's not what we want to do. We have this whole service and offering where we want to help people build a portfolio. And naturally, if you have we have a small but big team, something that is able to help the clients that we work with. But we never want to sacrifice our clients for the sake of growth and what comes with that. We want to really be able to take people on that journey, like we said, from acquisition, building a solid asset base, to then moving into commercial. And that's obviously more of a long-term play, but it is something that we're excited about this year as well, is to help more people who are at that stage get into a commercial asset, right? Because it's still something that a lot of people have not a lot of knowledge about, and no real understanding of that market and how it works. And so, just real education, trying to share that more. I'll speak for Ben in saying he started kind of posting more and sharing, I guess, a bit more about what we do on his social. So I encourage anyone to, go over and follow him at Ben Carrington and just hear about, who we're helping and how we're actually building Compound and what we're trying to achieve with it, and just to kind of stay informed and see if it is something that you want to go on this journey with us on. But definitely what Ben said, and we're very intentional about this year and super excited about actually to say we only help X amount of clients a month. You can come on board or you can wait the next month.
I love it. I think that's really cool. It's a different goal, of course. Like everyone, like you said, always chase this big amount of growth. We're going to hit 2 million people this year and all this stuff. It's where every the customer service industry, it doesn't really work when you're trying to work at that giant scale sometimes, because you miss things, you miss people, and that's when you get bad reviews, bad service. And the fact that your goal is actually to say, no, we prioritize customer service, hence why we're not going to try and push for scale, but push for good quality service and good investments. And I think that'll make, your reputation and what you do at Compound much richer, because people will be lining up to get in instead and going, well, how the hell do I get in now?
There's only so many good deals out there, like, of course there is deals, but the kind of ones that we want to go for and we believe really are the best. Like, as we said already, the competition for property from a buyer's agent perspective and also an owner-occupier perspective in some of the areas we buy in. So, we don't want to sacrifice the properties we present to clients because we have too many clients to service, right? So that's also a big reason, is understanding the market and that dynamic there, and realizing if we want to maintain this level of property and investment, there's only so much you can buy, and we don't want to kind of forget some things in the due diligence point just to get someone over the line. We really want to make sure that we're doing all that we can to make sure it's the right investment for our clients.
No, good on you guys. And, to wrap up, this has been such a great chat, Ben and I. I'm like so happy.
Very complimentary, Jo.
I just feel so relieved. I feel like I've had a therapy session about property. I think I'm going to... No, seriously though, I think I have to give kudos. I have to compliment, because I really value businesses that are customer-centric, data-driven, because it's not as common as you'd think. A lot of companies talk about being this way, but then they don't back it up. And I see this time and time again with different professionals I've met. I've had first-hand experience, or I've had clients come from those, bigger outlets or bigger units that, do have a big team to service. So that's why when I capture people like yourselves who are just doing good, honest work, good strategy, good investment, I have to give the compliments. I'm going to give a crap load of compliments all the time, So I have to. Mm-hmm. Yeah.
Well, thank you for having us as well. It's been really nice to kind of share with your audience. But hopefully someone out there who's listening, this can in some way as well. And we're very reachable as well through the website, through Ben's social page. If anyone does want to have a conversation further, we're more than happy to do that.
Absolutely. You kind of took the words out of my mouth. I was going to say, Rob, before we wrap up, where can people find you if they want to learn more or work with you? Like, where do you want them to go?
property.com.au and on the website as well. Some of the deals that we haven't touched on and have been kind of pretty amazing. We get properties valued for our clients every 6 months, so we will continue to upload them. There's a tab at the top, valuations, so they can actually see physically what these properties look like, the facade, all of that stuff, and then also what we purchased them for, how much they've grown, and obviously we have achieved that, but we'll give you a realistic kind of projection as well. But go onto the website, look at what we do. We help people from SMSFs to buying personal name, trusts, all of that stuff. So whatever the question is, wherever you're at, we certainly can help you keep moving forward.
Now, thank you so much. So for those listening, Ben and Kyle and Compound Property, of course, for any of your property needs. Once again, Ben and Kyle, thank you so much for being here. Super insightful, super knowledgeable. Thanks so much. Of course. Now, if you've got value from today's episode, make sure you subscribe, leave a review, and share this with anyone looking to grow their property portfolio. That's it for this week's No BS Real Estate Podcast. I'll see you in the next one. That's a wrap for this episode of the No BS Real Estate Podcast, powered by Abode AI. If you found this conversation helpful, don't forget to subscribe, leave a review, and share this episode with someone who might need it. If you're looking for more guidance on your home buying journey, you can visit www.abode.com.au for expert advice, property insights, and the tools you need to find the right home with confidence. If you're already on your journey, you can also download our app. Just search Abode AI on the App Store or Google Play. Have any questions or want to connect, you can follow us on Instagram at abode.com.au or send us a message. We'd love to hear from you. Thanks for tuning in, and we'll catch you in the next episode.